biggest thing that a borrower can do to prevent any trouble when it comes to purchasing a home is get pre-approved early on. Get pre-approved before you talk to a realtor. Get pre-approved before you see a property. Get pre-approved so a professional such as myself can go over your credit, your income, your assets, and any other questions you may have to make sure you're in a position to buy at that time. Everyone would love to buy $1 million house, but you have to be able to afford it. Mortgage rates have dropped, prices have fallen. It's an excellent time for people to look at purchasing, whether it's a new home, whether it's upsizing, downsizing, whatever the case may be. There couldn't be a better time for someone to look at purchasing a new home. Down payment programs vary. There's conventional loan programs that allow you to put down as little as 3%. FHA allows you to put down as little as 3.5%. And even VA, if you're a veteran of the United States military, you're able to put down 0%. So yes, there's still 0% financing available. Banks need to lend money. It's very important for them to lend money in order to generate revenue. That's the biggest source of revenue for banks. So they create programs, they put a little bit more thought into it than they have over years past, but they still need to create programs with low down payments so people can buy homes. In order for me to do a mortgage, I need a minimum credit score of 640. Myself and my staff are very well versed at helping people look at their credit report very early on, get your credit scores up to a point where you can purchase. Now, interest rates are very affected by credit scores. The best rates are when you have credit scores above 740. However, the most important thing is getting in a home, taking advantage of some tax benefits, and then you can always look at refinancing to better your interest rate. But just to reiterate, we need a minimum credit score of 640 in order to do any type of financing. The most popular question I hear is, what can I afford to buy? That depends on a multitude of things. Your credit and your monthly liabilities, the down payment you're able to put down, and most importantly nowadays is your income, or what's known as debt to income ratio. The average bank wants to see that 33% of your gross monthly income goes towards your housing payment, and no more than 38% goes towards your housing payment and all of your monthly debts. Now that's a general guide. What we can do is up to 50% debt to income in some cases, 45% if you're putting less than 25% down. So what that means is that 45% of your gross monthly income, including bonus, overtime, commission, and any regular type of compensation you get, offset by your expenses, including your mortgage payment, your car payments, student loans, credit card debts, and things like that. With those numbers, we calculate your debt to income ratio. As long as that number comes in below 45%, in general, we're able to obtain financing for you. Some other points regarding how much you can afford comes down to not only what the bank feels comfortable with lending you, but what you feel comfortable with. So when I talk to a client for the first time, I say, outside of having a 0 monthly mortgage payment, what would you like your monthly mortgage payment, including taxes, assessments, insurance, and principal and interest, to total? Then we can back into how much you feel comfortable with, how much the bank feels comfortable with. Then we kind of decide on what makes the most sense for you. Some of the other pitfalls we see is people moving from a W-2 or salary job into becoming self-employed. Most banks want to see people as self-employed for 2 years. Some of the misconceptions in the marketplace is that you need to be at your current job for 2 years. That's simply not true. If you were in college or grad school, you can certainly obtain financing with your very first job out of school. There's a ton of loan programs out there that allow for you to purchase a property as long as you have stable employment. So it's very important, once again, to get pre-approved and make sure that you're in a position to buy at that time.